The country is shaken up this morning following news of the U.S.'s deadliest mass shooting late last night in Las Vegas. As of this writing, the details are still emerging. The NYSE opened with a moment of silence for the victims. While the big market averages opened higher Monday, shares of MGM Resorts International (MGM) and other Las Vegas casino operators are being knocked lower in early trading. As of this writing, MGM is down just over 3.5% on heavy trading volume. The shooter had been staying at MGM's Mandalay Bay Resort on the Las Vegas Strip, and MGM owns the Las Vegas Village complex where the victims were attending a Jason Aldean concert at the Route 91 Harvest Festival. Investors are concerned that the shooting could scare tourists away from Las Vegas. But those investors underestimate Americans' reactions to tragedy. Las Vegas will continue its economic rebound. No doubt about it. And shorter term, the bullish price trajectory in shares of MGM that started at the beginning of the summer isn't being derailed here either. To figure out how to trade MGM and where Wall Street is getting it wrong, we're turning to the chart for a technical look. Since bottoming back in the spring, MGM has been enjoying some positive price action. Shares are up approximately 15% in the last 6 months, but that's not where the story stops for MGM. Since the beginning of July, shares of this casino giant have been forming a price setup that signals another leg higher in the final months of 2017, and that trajectory is unchanged here. The price setup in MGM is an ascending triangle pattern, a bullish continuation pattern that's formed by horizontal resistance up above shares at $34, with uptrending support to the downside. Basically, as shares have bounced in between those two technically important price levels, MGM has been getting squeezed closer and closer to a breakout through that technically important $34 price ceiling. Simply put, once shares can muster the buying power to push through that $34 level, it becomes a high-probability upside trade. What makes that $34 level so important for MGM? It all boils down to buyers and sellers. Price patterns, like this ascending triangle setup, are a good quick way to identify what's going on in the price action, but they're not the ultimate reason shares look attractive here. Instead, the why is driven by basic supply and demand for MGM's shares themselves. The $34 resistance level is a price where there has been an excessive supply of shares. In other words, it's a spot where sellers have previously been more eager to step in and take gains than buyers have been to buy. That's what makes a breakout above $34 so significant. The move means that buyers are finally strong enough to absorb all of the excess supply above that price level. That's good reason to keep an eye on MGM this fall. More of what's trending on the street.